What's going on, everyone? Honestly, it does not get any more beautiful than this. In yesterday's video, in the thumbnail, I said more downside, please. The name of the video was scaling into calls. Intraday, I alerted those calls were up huge. They were up pretty big. And what I said was most likely what's going to happen. In yesterday's video, I said that we were going to come back, retest levels of resistance, and then chop around and fall even lower. We didn't chop around. We fell straight down. I was saying that the SPY was going to break down below 451. I said most likely it's going to break down below 450. What happened? All right. So we're going to go ahead and talk about exactly what the hell happened. We're going to talk about the SPY, the NASDAQ, the IWM, the 30-year bond. We're going to talk about the crypto markets. And just, if you stop watching the video right now, please, guys, now is not the time to start buying into puts. All right, so without further ado, let's get started with this video. If you're not already following me, make sure to follow me on Twitter. We've been crushing the market. Make sure to subscribe, do all that good stuff, blah, blah, blah. All right, SPY. Guys, I was saying that there was going to be more downside. And now, if you've been watching my videos for the past few weeks after we caught the bottoms, the tops, all that good stuff, right? Looking at the chart right now, what is the issue? The main issue that I see right now is the RSI after a huge vomit to the downside. The RSI is still not oversold. The RSI is being stubborn. When the RSI is being stubborn like this, that is very, very, very bearish. I was telling you guys, for the past few days, there's no point of forcing any trades. Be patient. Just wait. Be patient. Scale into calls. Do not lose all of your money getting chopped up. Because I saw the weakness in the indicators. Now you can clearly see what I was talking about. And it's still a very, very terrifying. I was saying it was terrifying. I don't use these words to describe anything unless it's like actually terrifying. Do you understand? Like I was saying that it was terrifying because of how stubborn the indicators were. All right. Clearly right now, the fact that we capitulated, we fell intraday from 458 and we closed 12 points down. And the RSI, what did it do? Oh, I'm just going to sit above oversold at 31.24. The RSI didn't even want to become oversold. So what does that tell us? It means that there's still more downside potential, all right? So automatically, all right? Worst case, in my opinion, there's going to be another day. Maybe we have another red day on Monday, right? But after a huge drop like this, coming back to almost a 200 simple moving average, coming back to major support here, do you really want to start buying into shorts? Unless you want to buy into shorts for like short term, for like a week or two swing, right? And you think that there's going to be a short term movement, sure. But when the SPY is this oversold on the Bollinger Band, baby, this is so beautiful. Like, it's such an amazing buying opportunity. Scaling into calls further out for at least 3 to 4 weeks right now is a beautiful buying opportunity. Friday or tomorrow, I'm definitely going to buy. I'm going to buy more dips. If we fall lower, I'm hoping that we fall lower. I hope we gap down. I really hope we gap down because this can be one of the biggest plays of the month. If we can gap down even further on the SPY, it looks like that's what's happening. Maybe not. Right? Most likely what usually tends to happen after huge red days like this is we tend to, we gap up and then there could be some sort of like a movement upwards because this is just a really abnormal vomit to the downside. But I really genuinely really hope that we fall down even lower tomorrow. And, this is a play that you definitely, like, in my opinion, this is a play where you buy calls for, a few weeks out. This is going to be like easily a solid like 100-200% gain on any at the money calls that you buy for like 2-3 weeks out. In my opinion, those are going to really be profitable. So number one, I said number one after talking for 5 minutes. All right. The SPY is trading outside of the lower level of the B band. Algorithmically, we are very overextended to the downside, and that is beautiful. Like, I'm just so, like, this is beautiful. But the RSI is still not oversold. Finally, the MACD is trading below. I kept on trying to show you guys the fact that the MACD was above. I kept on trying to show you guys the fact that the MACD was trading above, yet the price was below where we were at this January 10th low. Super bearish. I kept on trying to tell you guys this is super bearish. I used the word terrifying for a reason. All right, and that's exactly what happened. So yeah, ideally what I want to happen is I just want us to really gap down once more at the open. If we're gap down at the open, I'm going to buy calls. I'm probably going to put 15 to 20% of my portfolio into calls for 2 to 3 weeks out at the money. Because I personally believe the market is going to bounce after huge, like, this is such a beautiful, but yeah, all right, so there's the SPY. All right, so I personally think that, yeah, whatever, we can come back down to this trend line here. Tomorrow, this level of support is going to be approximately 442.64. If we can fall down below that, that'd be even better. But essentially, if we can come back and retest this 200 simple moving average, that would be delicious, honestly. So it would give more time for the RSI to finally maybe even become oversold. But the main warning signal right now is the RSI is still not oversold, which is signifying there is still more downside potential. So expect another day similar to today where we bounce up 2 levels of resistance, fail, then fall down even lower. So unless this RSI gets itself figured out and situated, we're going to fall down even lower. But these dips are to be bought, baby. Like, I mean, what is the risk reward if you want to go short right now from a trading perspective? What are you aiming for? 440? What are you aiming for? Below 440? What do you expect? It's going to go to 433? Really? If you're going short right now, the risk reward is just not there. The risk reward to the upside for buying, for calls, is much more beautiful right now. So from a trading perspective, do not short into the hole. This is the hole right now. We fell into a hole. Do not short into weakness. You buy into weakness. You short at strength. Okay? And yeah, man, this is just very exciting. So yeah, there's my analysis on the SPY. The RSI is still not oversold. Let's go ahead and talk about the IWM. All right, so the IWM, 3 consecutive days of closing outside of the lower level of the B band. And not only are we, look at this RSI. It's staircasing down. What you want to see on the RSI is a nice, sharp move to the downside. A nice, sharp move. Like, for example, from January 4th to January 5th, you can see the RSI right here. Sharp, right? We can see, like, it was sharp because there was a huge red day, which is good, you know? Like, that's what you want to see usually in an RSI on weakness. But the fact that, how much did we drop? What is this? We dropped 5.5%, and the RSI is over here staircasing. That is super bearish. That's disgusting. All right? And that's exactly what we are seeing currently on the SPY. So the IWM can potentially have another day to the downside, but most likely what's going to end up happening is, I mean, I don't see us. I really hope we gap down again. I really hope we gap down again, but things are now starting to look so overextended to the downside. Most likely what's going to end up happening is we're going to gap up maybe 1%. You know, perhaps, right? But we're going to, again, retest these levels of resistance at 204.80, potentially not even break above 202, right? But then because this RSI is still showing so much weakness, this is still signifying there's going to be another huge downside day. All right. And of course, the MACD finally decided to break down below again what I was showing you guys for the past few days. And there was a major level of support here on the MACD on the IWM. We finally broke down below. So this is, I mean, again, where do you want to go short? Like, why would you want to go short here? The risk reward just isn't there. You do not go short into weakness. You start scaling into calls. All right. This is the time when you start scaling into calls very, very heavily for 3 to 4 weeks out at least. Because the bounce that we will, oh my God, like the bounce that we can see now, like at least what's going to end up happening on the IWM is we're going to end up retesting this up downtrend line. All right. So tomorrow, if we retest it, it'll be at 211. On Monday, if we retest it, it'll be at 210.50. So regardless, it's going to be at least above 208. So if you were to buy at the money calls, this is going to be at least $6-7 in the money. So this is, I mean, this is why I want the market to fall even lower because we get these cheap calls, and it's like algorithmically when the IWM is this overextended to the downside, when major indices are this overextended to the downside, they are just amazing buying opportunities because hedge funds and banks, why would they want to buy when things are at their highs? You don't want to buy when things are at their highs. You want to buy when things are getting dumped. All right. So, yeah, there's my analysis on the IWM. Personally, I want another day of red. And that might be the case because the SPY RSI is showing weakness. This RSI is showing garbage weakness as well. But, you know, of course, the MACD is oversold now. We could see a bounce, but I really don't want to see a bounce right now. Yes, I bought into calls. Yes, we bought into calls, whatever, but I really just want to see another just huge red day tomorrow. Please, like that would be ideal. I want us to gap down. I want us to fall down below 200. I would love to get 200 IWM calls for 3 weeks out. That would be spectacular. Like I want it to fall down to like 180.50 and then grab some 200 calls and just ride those up, man. That would be spectacular and that would be an amazing end to the year. But make sure to follow me on Twitter, on YouTube, right? I'm going to alert you guys when I do enter those calls for those swings. And right now is definitely not the time when you want to go short. It's the time to scale into calls. All right, so there's my analysis on the IWM. Let's definitely now go ahead and take a look at the major tech stocks, the 30-year bond, and the NASDAQ. All right, number one, Apple. All right, Apple is it's a $2 trillion company trading outside of the lower level of the B band. We failed at the 50 simple moving average here, and we have closed 2 days consecutively outside of the lower level of the B band. All right, and a major level of support is this 163.76 level. Similarly to what we were looking at before, after huge red days, the RSI, look at the RSI right now, stagnant. It looks like nothing even happened. It looks like it was just a normal red day. Like the RSI is not even responding well to this, all right? And the MACD is almost very similarly where it was on January 10th. Yet the price is clearly much lower. So that is not bullish, okay? So ideally, so now, unfortunately, unfortunately for my thesis about the market falling lower, Apple is at a major level of support. So unless Apple can also break down below this level at 163.76, unfortunately, most likely what's going to end up happening is the market is going to follow Apple's lead and hold that level of support and then end up bouncing. I don't want that to happen. I want Apple to break down below this level so that we can buy everything so much more cheaper. All right. So Apple trading outside the lower level of B band looks very overextended to the downside. Let's take a look at Microsoft. Microsoft, unfortunately, closed at a major level of support. Clearly, right at 300. It held 390. Right. Again, what is this garbage? Why is the RSI so stagnant like this? It's not a good sign, all right? So ideally, again, I want Microsoft to just vomit. I mean, regardless, if we, you know, look at how this is just so bearish. Like, obviously, yes, we held above this level of support, but I am being very greedy right now, and I want everything to just tumble even lower so that we could buy everything cheaper. Because this is an amazing buying opportunity, honestly, guys. For a few weeks out, like, I am very, very excited. With the Bollinger Band also falling just sharply like this, it means that there's a lot more downside potential, and it's not bullish at all. So I want Microsoft to also fall below 300, but it's not even trading outside the lower level of the B band. Take a look at Google. Google also, unfortunately, held this level of support at 2660, but yet the RSI still did not become oversold. So hopefully this falls a bit lower tomorrow. The RSI can become oversold, and then we can buy the dips even cheaper. But it's like, it's a bullish sign, unfortunately, that Google and Apple and Microsoft held support. All right. I just want the market to fall. All right. Amazon. Amazon is pretty volatile, so it's not as big of a deal. But you can see that it's oversold now on the RSI. Again, you know, barely oversold, which means that there is still more potential downside. We can see it's down in the pre-market as well, but it's also trading outside of the lower level of the B band very, very well. It broke down below this level of support at 31.27. So Amazon, you know, this is good. I hope the rest of the market, I hope Microsoft and Apple really take Amazon's lead and start falling even more. But yeah, those are the major tech stocks. You can see that things are basically at levels of support or still showing weakness on the RSI. And I mean, there's a reason why I share those. There's a reason why I talk about these indicators. And I've been telling you guys for the past few days that these indicators look terrifying, that they look very, very bearish. But, you know, this, I hope you guys are buying the dips. That's all I can say. So there's that for the major tech stocks. Let's go ahead and take a look at the 30-year bond. All right, so the 30-year bonds. This candle, it's for the next day. But here is what happened on the 30-year bond right here today. And in my opinion, one of the reasons why the 30-year bond, one of the reasons why the NASDAQ did not show that much strength is because the 30-year bond failed to really show a lot of strength. What we really need to see, what we needed to see today is the 30-year bond to close at least above the prior close. That didn't happen. Ideally, what we needed to see is the 30-year bond to break above 155.14. And that clearly did not happen. We were stagnant here. We basically just traded inside the previous day, which is not bullish, all right? And also, the RSI is very, very sensitive right now. There's no reason for the RSI to be this sensitive to the upside when there's barely any upside movement. So that is also very bearish on the 30-year bonds, all right? So, you know, for the next day, we can see that the 30-year bonds are showing, you know, gapped up. We can see that it's showing some sort of strength. If we can break above on the 30-year bonds, above 155.14, unfortunately, that's going to be bullish. But I hope we fail and the market falls a bit more. But that's most likely what's going to end up happening. If we break above 155.14 on the 30-year bonds, this is the symbol right here, ZB1 exclamation mark. Then the market is most likely going to bounce. And then, you know, these are the levels to the upside. But ideally, what I want to see is, because these indicators are showing so much sensitivity to the upside, I want us to fail at these levels of resistance and then fall down even lower. That would be a beautiful buying opportunity for the rest of the market. But unfortunately, because we see the NASDAQ stocks also at support, it's you know, unless those levels of support break, it's less likely that we continue falling as it is bouncing. All right, so that's why I'm saying not to buy into puts. So there's my analysis on 30-year bonds. Overall, we need to break above that level of resistance. Blah blah blah. All right, go ahead and take a look at the NASDAQ. So the NASDAQ, after a huge, so finally, we can clearly see that the NASDAQ is trading below the 200 simple moving average. Garbage RSI. After huge red days, the RSI is like a flat line. The RSI is basically showing a stock. Right now, this RSI right here It's the equivalent of a stock that's basically trading within like a 5-point range. That's basically what the RSI is showing. And the fact that the NASDAQ is breaking down lows, breaking down multiple levels of support, super, super bearish. So ideally, what I really, really want to see is the NASDAQ to come back. I want it to open at like 358. If we can open at 358, I'm gonna throw a party. I might end up just throwing a party, and because the bounce, in my opinion, is going to be so beautiful. We're going to just make so much money that all of this whole week of patience is going to really, really pay off, and it would just be an amazing start to the year. So, yeah, ideally, I want to see more downside on the NASDAQ. It's not a great sign that it barely traded outside of the lower level of the B band here. That's another warning signal that we could continue falling lower. In the post market, you can see that there's a 3-point difference in where we are right now. But again, after hours, it could just be like an emotional response. Most likely, what's going to end up happening is after a huge drop like this, once again, you buy into lottos you buy into short-term puts to try to capture some weakness to the downside. But the bulk of your money should be going into longer-term at-the-money calls. All right? So from a trading perspective, now is not the time to go short heavily, right? Now is the time to start scaling into calls. So, yeah, the NASDAQ looks like there's still more room to the downside. The RSI is showing garbage weakness. Let's take a look at the MACD here. Let me zoom out. The MACD is still not lower than it was on January 10th, which is absolutely ridiculous. So the MACD is not lower currently. You can see this MACD blue line right here. We're still above the MACD from where we were on January 10th. Yet the price is clearly below. All right, so that is not bullish. There's clear evidence from what I've been saying for the past few days that the indicators looked garbage. And that's, guys, this is what happened. So, that's why I really, really I would love to see more downside so that we can buy those calls. Now is not the time to start being bearish. If you start being bearish right now, I really don't understand what you're doing. Look at guys, the NASDAQ is at 360. They closed at 360. The all-time high on the NASDAQ a few weeks ago was at 404. We're $40 away. If you bought at the money calls for 3 weeks out right now, this is just beautiful. Like, these bounces are going to be, honestly, these bounces are going to be ridiculous. I want us to gap down even further on everything. I want to buy at the money calls. And I want to close the year out. Close the month out so strong. But again, the RSI showing weakness is still bearish. The MACD still needs to break down below here. Just a beautiful, exciting day today, and honestly. So, yeah, there's my analysis on the stock market. I told you guys there would be more downside. I wasn't just trying to cap. And look, for the past 3 days, look at this. I was saying weakness, 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 more downside, please. What ended up happening? More downside. All 3 of these days. So, it's what we do. And we ended up buying calls yesterday at the close, and those worked out beautifully. So it's just, even if we're going lower, personally, I didn't want to buy into puts. Even though I saw there was weakness, I just did not want to buy into puts. I'd rather just wait, be patient, be less stressed out, and buy into calls when things are very, very overextended to the downside. And now is definitely the time to start really, really buying into calls, in my opinion. We came back. This is the first time the NASDAQ has came and broken down below the 200 simple moving average since April of 2020. So in the past 2 years, the NASDAQ has never gone below the 200 simple moving average. And if you want to go short now, when we are this algorithmically overextended to the downside, you are playing with fire. All right, so there's my analysis on the stock market. Now let's go ahead and take a look at the crypto market. So Bitcoin, we were very, very bullish today. It looked like things were starting to be very bullish today, but we came and failed perfectly at this trend line here at the high today. Honestly, it was at 43,500, and we can see that it failed perfectly at this trend line. And because the overall indices market was red, Bitcoin is also falling, and it's clearly red and it's making new lows. Holy crap! But yeah, if 40,000 doesn't hold, then obviously we're going to break down below 39,500. We can see the RSI is still not oversold, guys. That is very, very bearish. That's something I've been sharing in the overall indices market as well. Overall, that's why I've been saying the market is most likely going to end up breaking down below 40,000 and then most likely break down below 39,600. And clearly, if the indices market falls again tomorrow, that's most likely what's going to end up happening on Bitcoin. We can clearly see the weakness here in the indices, or in the indicators. The one good thing that's finally happening now on Bitcoin is the MACD is starting to cross below, and that is exactly what we want to see, because it's going to end up becoming oversold. This entire time, the MACD has been overbought. That's why I was saying, guys, this is not the time to become super, super bullish on Bitcoin. It still looks like it can fall. So that's clearly what looks like it's, what. I mean, guys, this is, I've been talking for the past like 26 minutes. All right, so there's my analysis on Bitcoin. Another, few days of falling, cooling down on the MACD would be bullish. So if we can hold above 40,000 and the MACD crosses down below, that would be enough steam for another bounce to 43, 44,000 in my opinion. All right, so there's my analysis on Bitcoin. Let's take a look at Ethereum. Ethereum, 3,000. I was saying Ethereum was going to break down below 3,000. Right now it's at 3010. Okay, so clearly, what was the low today? It hit 3,000 perfectly. Okay, the RSI also bearish as hell. The MACD barely oversold. Still more potential rooms to the downside on the entire crypto market. Now is the time in the equities market to start scaling into calls. But if the crypto market, if Bitcoin breaks down below 40 and then 39.5, Ethereum is clearly going to break down below 3. And then, 28.50 is going to be the next target to the downside. That's when you want to really, really start looking to go long. Much heavier in the crypto market, in my opinion. And yeah, man, this is a post-Christmas holiday sale. And it's just beautiful. This is exactly what I was saying for the past. It's just beautiful, man. It's just, what a beautiful end to the first month of the trading year. I'm really excited for the next month, because these calls that we're going to buy on the equities markets are going to be amazing. All right, so yeah, that's my analysis on the crypto market. There's my overall analysis. I hope you guys enjoyed it. Make sure to like, comment, subscribe, follow me on Twitter. All right, so yeah, I'll see you guys tomorrow. Thank you.